basis, we have been winning share in large part of our business, which has resulted in a significant corporate share gain in last 2 years. Talking about margins, our gross margins improved 700 BPS year-on-year to 52% and is back to pre-inflationary levels. With competitive intensity remaining high, we have stepped up our A&P investments by about 700 crore year-on-year this quarter. Moving on to performance across the 3 segments. Home care delivered 3% growth on a very strong base. Beauty and personal care and foods and refreshment both grew 4%. Home care and beauty and personal care, which constitute 75% of our business, grew volumes in mid-single digits, while foods and refreshment saw mid-single digit volume decline due to higher price levels to offset input cost inflation. Margins in all 3 segments remained healthy, with home care at 19%, beauty and personal care at 27%, and foods and refreshment at 19%. We had a busy quarter with many innovations going into the market. Pond's hydration regime, Indulekha anti-dandruff oil and shampoo, Vaselini's new range of premium moisturizers, and Lakmé's range of makeup products were some of the innovations launched in beauty and personal care. In FNR, we have launched artisanal slow churn ice cream made with 100% fresh cream and real fruits. We have extended our Horlicks Plus range with 2 new variants, Strength Plus for adults and Growth Plus for children. In home care, Vim Pure and Comfort Intense Fabric Conditioner were launched. Moving on to our first half performance, our turnover grew 5% year-on-year, just shy of rupees 30,000 crore. EBITDA margin was up 90 BPS year-on-year to 24.1%. Profit after tax before exceptional item grew 11%, and net profit at rupees 5,189 crore was up 6%. The board of directors have declared an interim dividend of rupees 18 per share for the year ended 31st of March 2024, a 6% year-on-year growth in total payout. Looking ahead in near term, we remain cautiously optimistic. FMCG demand is likely to continue a gradual recovery with tailwinds from upcoming festival season, sustained buoyancy of services, and government's thrust on capex. At the same time, we need to be watchful of heightened competitive intensity, volatile global commodity prices, as well as impact of monsoon on crop output and reservoir levels. If commodity prices continue to remain where they are, we expect our price growth to be marginally negative. Our focus remains on driving competitive volume growth, stepping up investments behind our brands, and maintaining EBITDA margin in a healthy range. We will continue to manage our business with agility and take actions to ensure long-term 4G growth that is competitive, profitable, responsible, and consistent. With this, I complete my prepared remarks, and now we can take some questions.
Thank you, Ritesh. Sesa, would you like to ask the first question, please?
So basically, I would like to understand, you did mention that the volume recovery will be gradual, but what we have seen in Q2 is the 2% volume growth is the lowest in the last 7 quarters, if I'm not wrong. So could you tell me that when do you actually expect a meaningful recovery in volume? From which quarter onwards?
Yeah, if I can start by framing the response to that, and then maybe Ritesh could help me with some of the details there as well. So first of all, if you disaggregate this 2%, 2.5% actually, by divisions, actually we've grown in mid-single digits on 75% of our business, which is home and personal care business, which is pretty strong, and it's in line with our strong traditional quarters. Where we've seen a decline is in food and refreshment, where actually prices have gone up, and we're still seeing an impact of inflation on the volumes in those categories. So it's the mix of the two that generates the number that it does. Having said that, we expect the volume recovery to be gradual because our pipelines are adjusting. Consumers are still paying higher prices that we're selling in, and over a period of time, the prices will land on shelves, and we'll start to see the impact of that in consumption. Also, we expect this process to take a few quarters, as we mentioned last time, and therefore we will see a consistent improvement in volume growth. Having said that, we hope when we've gone through this whole cycle of inflation, deflation, and we're more in the steady rate, we should be looking at our mix of 50-50 volume value growth, and we go back to our traditional sort of CAGR of 8-9% that we've had in the last decade. So Our intention now is to do the right thing, keep investing for competitive growth behind our brands. As you've noticed, our investment this time is significantly high on our brands. We've actually increased the investment over 65% if you take it over last year's base. So we're doing the right things for the medium to long term, and we're quite certain that given the fundamentals of the business are strong, that the competitive volume growths will come back, and we are very, very focused on that as a one single-minded mission for the entire company end to end at this point of time. Ritesh, anything you'd like to add?
No, I think absolutely very clear. And if I just probably add a little bit of context from the past as well, we have seen high inflationary period in the past as well. We had seen in 2008 and 9 for skin cleansing. We saw in laundry 2012 and 13. We saw for tea in 13, 14. In each of these periods, we saw as commodities went up, it impacted volumes. As commodity came down, there's a gradual recovery of volume. That's the exact phase we're going through. If I just quote, for example, FMCG overall price for the market, this quarter consumers are still paying 3% price inflation, which means all the price cuts that we have taken, they are yet to witness. And once that happens, our view is that volumes will start recovering gradually. And again, remember that we have grown our volumes at 2.5% in this quarter on a base where we had grown our volumes by 4% against market, where on a 2-year basis, market is roughly flat.
Okay. Also, the festive season is underway. So, sorry, just.
Tessa will come back to you. Shilpa?
Okay.
Right. Hi, thank you. Thank you, Prashant. Hi, gentlemen. I'll just take the question from where Tessa ended. In fact, we're just heading into the festive season that's underway right now. What are early indicators of demand telling you right now? And, Ritesh, to take on from your question that you spoke about, the price cuts yet to be reflected. It's been, I think, over a quarter since the price cuts have hit the market. So when do you actually see that translating into volume recovery? Can we say that will be closer to that 50-50 level that, Mr. Rohit was talking about the next fiscal, or can we see some signs of that going towards that later into this in the second half of this fiscal as well?
Yeah. So let me do the pricing question, and then we'll hand over to Rohit for festival. So on pricing, as you know, in this quarter, we had roughly flat price growth. And our view going forward, Shilpa, is if commodities remain where they are, we would see, in fact, marginally negative price growth in short term. So that's the pricing outlook given where the commodities are at this point in time. Of course, on a long-term basis, commodities are cyclical, which means what has come down will go up, what's gone up will come down, and it will stabilize. And on a long-term basis, to Rohit's earlier point, we do see FMCG growth roughly 50-50, where we expect half the market growth indeed to come from price and half should come from volume. So that should come. But given where we are at this point in time, that's where the equilibrium is. Second, even in this quarter, Shilpa, in current quarter, we did take price decreases. We did price decrease in soap business. We also took price decreases in our laundry portfolio, because this is where we have given the full impact of all commodity, which has moderated. And typically, we've seen that a quarter later, consumers will start seeing benefit of all of that as the trade pipeline clears up. Market had seen 14% price growth at one point in time. Over last 4 quarters, it has now come to 3% in the current quarter, where we have 0% price growth in the quarter. So I expect a quarter more for that fuller impact to be seen to the consumer. But when the equilibrium will come back, in my view, is more cyclical and more, I would say, a few quarters down the line as we start seeing commodities starting to stabilize. But let me hand over to Rohit on festival.
Yeah, I think just want to state the fact that very important indicator is the competitiveness of the volume growth. And we see in large parts of our business, we're competitive by volume. And, the derivation of that on top line, and eventually we're a big business with mixed of many, many categories. So you see an average number. What we're tracking is, are we investing on our brands competitively, which we are. As I mentioned to you, this quarter, we've increased our A&P by 420 basis points, 65% over last year. And we know we are very, very competitive, and we'd like to stay there. We can start to see that in our competitiveness and volume, which is quite healthy. And now we just have to stay the course and keep doing the right thing for the business to eventually find that stabilized level when the cyclicality of this is over. And it is across different businesses at different parts. Now, coming back to the demand question, what's very encouraging is that we are in a market where we see growth coming back in rural, although they are on a weak base. We also see growth coming back on a positive way in urban. And if you zoom further, we see more growth in urban, in large packs, in more in higher income households. We believe there's also strong government investment in infrastructure, which is finding its way into the economy, and that is creating a tailwind. And we believe secularly this is a good trend. And as far as the next quarter is concerned, we hope that we are able to leverage the festival and the demand is positive. There, of course, is the unknown and the downside of monsoons. We can't say what impact it'll have. But generally speaking, we are very, very optimistic, and that's how we'd like to operate in this business, with optimism, but with one foot in reality.
All right, thank you. I'll come
Vinny,
back in a
would you
bit
like to-
with more
Shilpa,
follow-up
will-
questions
Sure.
on that bit.
Sure.
Vinny, would you like to ask the next question?
Yes, sure. Good afternoon, gentlemen. Thank you so much for giving me this opportunity. So, I want to take back a step back, because last quarter we had spoken about some of the competition coming in from smaller and regional players. One, what is the update on that we have? Is that still a tough competition coming in, and which categories? And also in terms of rural outlook, like you were mentioning, that unseasonal monsoon, that is something that has impacted FMCG players, or overall in terms of the movement that we're seeing. So how is the rural outlook now looking like, so that we can look at, forward looking, does it look that we could see some recovery coming in?
Ritesh, would you like to just respond?
Yeah. So let me pick up Vinny first the rural. And what we're seeing for rural, the demand is recovering gradually. And of course, the point still is that the growth that we've seen now of roughly 7% volume in rural market, it's on a base of a 9% decline same period last year. So if I look at a 2-year basis, there's still a marginal 1% decline in rural volume, which means the markets have not yet fully recovered. So that's one. But what is really helping this point in time, the recovery, the point Rohit mentioned earlier, inflation moderating gives more disposable income to rural consumers. That hence is leading to recovery of demand, though gradually. We have seen the real rural wages, which were negative, have now come into some positive territory. That's a good news. We have seen that the government expenditure to support rural economy had been increased a few years back, and that has been maintained at a high level. That is helping rural recovery, and equally higher amount of capex, which is getting spent both in last budget and the current budget put together. That is also supporting overall rural income. So there are many factors which are, let me say, in favor of rural demand recovery, albeit the recovery is gradual. And of course, to Rohit's point earlier, we have to watch out in terms of monsoon. Monsoon has been uneven, and we know that we're ending the period with a lower amount of reserve level as well. So we have to see what impact it plays out on the Kharif output now and Rabi sowing later point in time. Overall, we do remain cautiously optimistic and expect demand to continue to recover gradually. So that's on rural demand. And if I just probably answer your question on competitiveness, I mentioned in my opening remarks as well that overall we have seen small players when commodities do come down, and we have seen at mass end more amount of competitive intensity as more players now are participating in the market. That happened in tea to start with, where the loose tea prices came down, premium tea got inflated more, and almost the commodity decoupled. And hence we saw more demand of consumers down trading, and hence we saw that loose tea players doing much better business. That was one element which was happening. Second element on competitiveness was again in mass end in, let me say, detergent bar. Very similar as commodities came off, we've seen that element of the market growing faster than large players. So in pockets of those certain geographies at certain price point, especially mass end, we have seen competitive loss. But overall, the point we mentioned earlier that on a 2-year basis, we have strong market share gains. Even on current year, we have market share gain, and our volume growth in terms of competitive volume growth in more than 75% of the business, we are gaining volume share as well.
Thank you, Ritesh. Nupur, would you like to ask the next question?
Hi, sir.
Hi, Nupur.
Asking the next question. Hi, sir. Sir, मेरे 2 सवाल है basically. जैसे कि आप बता रहे थे कि गवर्नमेंट एक्सपेंडिचर में हमने बढ़त देखी है, तो रूरल डिमांड ग्रेजुअली इम्प्रूव हो रही है. तो हम ये कह सकते हैं कि इलेक्शन ईयर भी है, स्टेट इलेक्शंस की भी डेट आ चुकी है, नेक्स्ट ईयर इलेक्शन भी है, तो आने वाले जो 6 मंथ्स होंगे वो रूरल डिमांड वो बेटर होगी बीते 6 महीनों से. और मेरा सर दूसरा सवाल ये था कि ब्यूटी एंड पर्सनल केयर में हमने देखा कि आपने नए लॉन्चेस किए विंटर से पहले. विंटर्स और फेस्टिव सीजन इस बार कंबाइन हो रहा है, तो यहाँ पे क्या एक्सपेक्टेशन है, स्पेशली ओरल केयर को भी लेकर?
Ritesh, आप पहला सवाल लेंगे, मैं दूसरा प्रश्न को उत्तर दे सकता हूँ.
Yeah, so rural, as I spoke, Nupur, earlier, so we are seeing gradual recovery. And as I mentioned, there are more than one factors which are helping the recovery, be it heightened level of expenditure which has remained, be it capex which government is spending, which is going to help recovery in terms of more rural wages. We know that after agriculture, the second most important job source for rural people is nothing but construction activity.